What is a high probability fair value gap? What is a fair value gap, and how do I pick the highest probability fair value gap? A fair value gap is an area of inefficient price action. Price action. So here we have a wick, below the wick and the height of this wick. As you can see, the body of this candle has not been filled by the wicks of the candles either side. This is when price moves very quickly, it moves inefficiently, and it leaves a fair value gap. Now, fair value gaps tend to get filled and price continues to move down. Now, that's one way of trading a fair value gap. I will show you an example. You dive into the 5-minute chart, and this works on any single time frame. As you can see here, price moved quickly up, left a fair value gap, a very big one, and it retraced back, filled this fair value gap, and moved off. Same again here. Price moved very quickly, left a fair value gap, moved up, and continued to move up. Now, this is a fantastic example because it explains two concepts: an inversion fair value gap and a fair value gap. So as you can see, the original fair value gap starts here and here. And price dipped into it, moved off, dipped into this fair value gap, and moved off. However, as you can see here, there is also a bearish fair value gap. Now, as you can see, price disrespected this bearish fair value gap by having a candle close above it, and then it created a fair value gap off it. This is a very high probability fair value gap. And now, to get a more precise entry, as you can see, the inversion fair value gap, because it has been inverted, it has been disrespected, it can be still used as an act of support for price, the same as here. So you have a level. Okay, I want to use this fair value gap, but to get a more precise entry, I will use this inversion fair value gap. Now, this can go even deeper. We're inside of this inversion fair value gap. However, if we drop down onto the 1-minute time frame, we have dipped into it, moved off, and in that same process, we've disrespected a bearish fair value gap. So, potential entry that you could look at is, once we have disrespected it, you set your order here, your stop loss at the structure low. It's very unlikely the price will dip into this again, as it has reacted off this inversion fair value gap. We have also swept this form of liquidity, and now price is making high highs from this fair value gap. You take profit, whatever it wants to be, 2 to 1, 1 to 1, etc. But rather than entering here, you wait for the reaction of this inversion fair value gap, and then as you can see, all we've done as price started to move up, we would just very nicely fill in fair value gaps. As you can see now, you can say that's random, but if it had a candle closed below, and as you see, there's one here. But another point to look at in terms of fair value gaps is our would want fair value gaps below 50% of each range. So if we mark out this range with the fib tool, as you can see, fair value gaps work best if you're bullish when it's in the first 50% of the range. Same here, this tiny little range, again, bang on 50%. Here, again, inside of 50%. Now see how these ones get disrespected, but here, this one at 50% gets respected. So things to note: fair value gap is, say these are candles. Obviously, if we have this, would be the fair value gap. If this was a bearish example, because these are the bearish candles moving down, this would be the fair value area. You've got two options to use this. If you have bearish structure, you think price is going to go down, you can use this as a way to retrace. Or if you are thinking a reversal is imminent, you can also use this as a way to bounce off price. So if we've come up, we've disrespected this fair value gap, we will then use it as support for higher prices. So that's something to add to your arsenal. Another point is obviously 50% of the range. 50% of the range is very important, because those will be high probability fair value gaps. Also, if you have a fair value gap that has two fair value gaps either side of it, this will also be a high probability fair value gap, as outlined in the Euro USD example.